Hi there, I'm John, one half of the Corporate Breakout Couple. Today I have a very interesting topic for you. It's one that I covered in one of my previous masterclasses and it's titled The Greatest Wealth Transfer. Now, one of the questions that you may want to ask yourself is, am I part of this wealth transfer? And perhaps another question is, where did all the money go? And that's what I'm going to cover exactly in today's masterclass. Well, today is not the full masterclass as I've covered that a few sessions ago. And in case you are unaware, my wife, Fran and I conduct masterclasses 1 to 2 times a month on different topics every single time. And that is one of the key reasons and purpose why we want to do it, because we want to promote financial literacy and it's always an ongoing journey. Well, so back to today's topic, the greatest wealth transfer, and how does that impact you? Now, greatest wealth transfer has two main parts that I'm going to cover today, but I'm going to focus on the second one, right? But before that, just to share a little bit about Fran and myself, in case you're new to this channel, we are known as a corporate breakout couple and we are financially independent since 2020 at the age of 40. And financial literacy is something that we advocate every single time. If you notice in our videos, whether we cover about the cost of living, we talk about early retirement, investing, breaking out the rat race, and many more such topics, everything ties back to financial literacy. So in short, we are very passionate about it and this is the reason why we do what we do. Now, let's talk about the different wealth transfer. The first one is generational wealth transfer. That one is something that's pretty known. I'll talk a little bit about that. But the focus for today's topic is more on the second one, which is money from the low and middle income. How does it move for these low and middle income people, move it to the rich and wealthy? And that is the wealth transfer that I want to focus on today. Right? But before that, generational wealth transfer, for your information, is actually the financial assets that is passed down from one generation to another. Think of it like the silent generation or the boomers, right? The older generation, and they are passing their wealth down to typically about two generations back, like from the boomers to maybe the Gen Zs, or maybe from the silent generation to the Gen X, or maybe the millennials, right? So that's how it works, and the money is passed down through inheritance in the form of cash, bonds, stocks, other investments, so that the net worth is essentially transferred. So this is the generic one, right? And that's not what I'm going to focus on today. I want to focus on this one. Well, what is the wealth transfer to the rich and wealthy? Have you ever asked yourself this question? Why do the rich keep getting richer? Right? If you notice, be pre and post pandemic, like the Forbes 10, top 10 or top 20 richest people in the world. If you notice their net worth, they have actually, many of them have doubled since pre and post pandemic, right? And that's very interesting because, hey, how come there's a crisis, the stock market has been going up and down, but yet this guy keeps getting richer and richer, right? And that's something for you to note. And then on the other side of the spectrum, the low and middle income people, why are they constantly complaining about inflation and higher cost of living, right? Over here, I wrote who are the ones. Yeah, I've given you the answer. It's usually the low and middle income people that actually complain about the cost of living, right? So how does the poor mindset approach affect the financial game, all right? Or rather, how the poor mindset people approach the financial game, right? The low income earners, let's talk about them first. When the pay comes, they think about what they can spend, right? And the bonuses, when they come, they spend it all. Even though they could have saved the extra money to put towards something else, but nonetheless, when the money comes, they spend it. And essentially, they're living paycheck to paycheck, right? And some of the higher income earners, they're actually essentially about the same as the low income earners. When the pay comes, maybe they're a bit more responsible, they pay the recurring bills first. But other than that, they think about what else they can do with the other money, right? Even if they do manage to save a little, it's usually a little. When their bonuses come, they tend to spend the rest. They think about what they can do with the money. And essentially, their rate of spending is a lot higher than the rate of savings. So if you think about it, why is it that a lot of middle and even some of the upper middle income, high income earners, all right, but they're still nonetheless probably a corporate employee, why is it that even though they have such a bigger chunk of money that's coming in, they are unable to save significantly, they're unable to have a higher savings rate, and more importantly is they don't seem to know what they want to do with the money if they choose to save, right? And I attribute that to having no financial game plan. And the financial game plan is so important because without a reason, without a purpose, without a vision, like a financial game plan, and what it can amount to. Many people, even if they have some extra money, some extra savings, they don't know what to do with it. In other words, they are very purposeless with the money that they save. So without a proper financial game plan, like for example, gunning for financial independence early in their lives or gunning for early retirement. If you don't have such financial targets, usually when you have the money sitting in the bank, guess what happens, right? You think about having funny ideas, and it's so easy to spend money, right? Whether it's on travels or material things, it's so easy to just, okay, I'll just take some money and go and spend it here and there. So without a purpose, without a vision, a goal, a target, it's very difficult for somebody who consistently save money over the years but don't really know what to do with the money. And the tendency is you might take some of it, right? Sometimes it's because of inflation or unforeseen circumstances, you have to dip your savings. But essentially, when you don't know where your money is ultimately going, which essentially means you have no financial game plan, that's when it's very easy to approach the financial game with a poor mindset. So my question to you is, do you want to be like the rich and collect the interest, collect the cash flow, right? The right term is cash flow. Do you want to be like the rich, or do you want to be like the poor, paying either they're in debt or just being paycheck to paycheck, or just owning a lot of liabilities like the middle and some of the upper middle income people having a lot more liabilities like bigger cars, bigger houses, and then end up not being able to save much or being able to retire early. And remember, you need to understand that the markets are a zero-sum game. So, meaning whether you are in the financial markets, whether you are in, let's say, in a cryptocurrency game, it is a zero-sum game, which essentially means there are winners and there are losers. There are people that win and earn the money, the profits, and there are those that loses the money. So my question to you is, which side do you want to be on? And the gist of the greatest wealth transfer is this. Every time when there is money printing that's happening, right, in the world by a lot of central banks, right, all the different bond buying programs, right, like for example the Federal Reserve in the US, and essentially they're printing money, right, introducing more money into the markets. Where's the money going? Right? Is the money going to the poor and the middle income, or is it going to the rich? So again, if you want to understand the game of money, you need to think like how the rich thinks. So you want to be on their side by understanding how to make money like them, how to spend money like them, how to have cash flow like them. Right? So let me just share a little bit about some investment shifts and trends today. Okay? By the way, this is not financial advice, and always do your own due diligence, purely for educational purposes only. So younger generations are investing differently, all right? They are prioritizing ESG today, right? If you are somebody who's been investing for some time, 10, 20, 30 years in the market, you also need to understand where the younger people are shifting the trends in, because that's typically where the businesses are also headed towards, right? And with injection of younger generation into the workforce, they will change the way everything works, not just work culture, investment trends, the way people spend money, right? And it's essentially very different generation to generation. So you got to understand how the younger generation thinks. So they prioritize ESG, right? Environmental, social, and governance. Like, for example, climate change is a bigger topic these days than maybe 20 years ago. Maybe the younger people are more into recycling, right? Into protecting certain Earth's resources compared to some of the older generation. During the industrial age, they are about building and expansion. So these are some of the shifts, right? And there are new investing trends. 20 years ago, you don't have meme stocks, you don't have meme coins, you don't have robo-advisors, right? And now with AI in the picture, is even more apparent, correct? So new investing trends, and like for example, fractional shares. Last time, if you want to own a share, you need to, or rather, if you want to own a share of the company, you need to buy the full amount. Now you can do fractional, right? And it's easy to own, which means you don't need as big a capital in order to own a share, right? That's why it's called fractional shares. And nowadays, with digital trading, investment platforms, everything's online. In the old days, 30 years ago, if you want to make a trade, you need to call your broker, correct? Or you need to go to a teletext, and if you're some of the older generation, you understand teletext in Singapore, you need to go and monitor the stock market, right? But nowadays, everything's online, everything is digital. So it's easy to invest, easy to open an account, and everything can be done remotely. You don't need to go to your stockbroker, correct? And cryptocurrency, digital assets like NFT, these are so popular these days. Ask any youngsters these days, like those in their 20s or even early 30s, probably the first investment tool or first investment instrument that they touch is probably cryptocurrency rather than stocks. And that's very interesting, right? Because that's the new trend today. And this is just how the trends have shifted. So if you are older generation, even like for myself, early Gen X, got to understand the trends, got to understand, how the younger generation thinks and invest, because that will ultimately impact your investment thesis too. All right, so let me just cover some of the challenges and risks in today's environment and market. So it's a very volatile job market. And the environment, these days there's a lot of layoffs, and job security is not really in the picture anymore, correct? And there's AI replacing humans. So a lot of mundane jobs, a lot of jobs, especially if it is not evolving with time, there's a chance that AI is going to replace, right? Robots together with AI is going to replace these humans' jobs, and that might make the human obsolete. Correct? So this is a challenge and a risk in today's times, right? And there are higher debt levels. Ever since the Lehman Brothers, the subprime housing crisis in the 2007-2009, when some of the financial institutions collapsed, right? Like Bear Stearns, Lehman Brothers. So there's higher debt levels. Why? Because it started by the central bank of US started printing money, the rest of the world follow. So because US is the world reserve currency, so there's higher debt levels. Today, US is holding about US debt of 36.5 trillion, right, US dollars. And it keeps increasing, especially since the Lehman Brothers time. So what does that mean? That means that with more money in the picture, actually, your value of money actually being eroded, which also means inflation is kicking in, right? And that's another risk, high inflationary risk. There's geopolitical risk, a lot of wars, not just physical wars that's going on between, in the Middle East, but in Russia, Ukraine as well as trade tariffs, right? That's a very big topic these days. We don't really know how that's going to ultimately impact, but definitely it is a geopolitical risk. So if you're financially illiterate, right, you're somebody who don't know anything at all and choose to just, bury your head in the sand and not do anything, and that is ultimately the biggest risk, because all these things that I've just mentioned translates to you as an individual. You may not think that, I'm not a stock market person, I'm not really into investing, but as long as you're somebody who needs to work to earn money, you will get impacted. So having financial literacy, it is your individual's responsibility, right? And of course, there's higher taxes as well. Not just in US, not just in Singapore or Malaysia. Taxes is something that is a mechanism that governments will use to try and increase more revenue for the country to then use it for more spending. That is a natural occurrence for any economy in the world. So ultimately, I would like you to think about this. If you are somebody who's worked 9 to 5, 9 to 6 for the longest time and you are an employee, then maybe certain things have been autopilot for you. You don't really think about the bigger picture. You don't really think about the job economy. As long as your job doesn't get impact, right? That is pretty much a closed mindset, an employee's mindset. Because if you are unable to think like a business owner, you have never owned a business before, or you have not invested, you have not really, try something different out of the ordinary, think out of the box, it's very hard for you to, adapt when things move so quickly. For example, pandemic changed a lot of things, right? Remote working, suddenly a lot of people cannot go out. A lot of routines have been disrupted. So you're going to understand that if you're somebody with a strong comfort zone and you have the employee mindset, when it comes to navigating the tough challenges of the world, you will have a harder time compared to somebody with an ownership mindset who can pivot fast, who can move fast, agile, and adapt very quickly. That's very different, right? So that's something I always encourage people to do, to grow and learn, to learn about something different from your current industry, something that you're comfortable with. Go and try something different, right? That's how you build your ownership mindset and ultimately get yourself financially literate. That Fran and I advocate all the time. Okay, so that's the end of my video. Do come and join our Facebook group. Fran and I have a Facebook community called Breakout Community by Fran and John. Or you can scan the QR code to join us, where we have like-minded people in there. We post things that can support each other, right? Otherwise, this is me, John, one half of the Corporate Breakout Couple, signing off. Do hit the like button and subscribe to join our channel so that we can create more content like this for you. Otherwise, I'll see you in the next video. Bye-bye.